Hello and welcome to this webinar on maximizing new age technology and regulatory developments around CBDCs in the Asia Pacific region. My name is Marielle Barkley and I'm the editor of this award-winning Global Treasury Leaders Program, which is organized by The Economist and sponsored by Deutsche Bank. The program, of which this webinar is part of, aims to share thought leadership and to connect treasurers around the world. And we do this through a series of activities every year. These include summits in different regions, webinars like this one you're joining today, white papers, interviews, and an online community. But going back to today's webinar, the idea is to make this session as interactive as possible. So please ask as many questions as you like and type them in the questions tab. There's a Q&A tab that you will see at the bottom of your screen. Please send them as soon as you think of them. Otherwise you will forget. We will bring them up when appropriate. So without further ado, please let me introduce our distinguished chair, Lane Silverman, who's a former treasurer at JTI and currently a treasury consultant. With that, Lane will now introduce our speakers. Lane, over to you.
Thank you, Marielle. As Marielle mentioned, my name is Lane Silverman. I'll be moderating this webinar, so welcome everyone. We have two subjects we want to discuss. First, about the development around CBDCs and other forms of electronic digital wallets. And if we get to it, maybe also some of the related regulatory developments. The other subject is new age technology and thinking about artificial intelligence, RPA, and with a focus on cash management solutions, especially also in regulated markets. Before we get started, let me indeed, as Marielle said, introduce the speakers. Sophie Young, Director Group Treasury at or Regional Treasury, APAC at Henkel, a large listed German multinational in home, personal care, and adhesives. Shuilin Chen, Director Group Treasury at Trip.com, a large listed Chinese multinational online travel companies. And Qingtan Xia, Managing Director, Head of Cash Management, APAC at Deutsche Bank. And as Marielle also said, if you have questions, type them in. You can type fast. I can read as fast as you can type. And I will ask you, I will ask out the questions out loud. I'll say the questions out loud so we can answer them. I'll see if when they fit in the discussion, but I will get to all of them. So let's start. Let me first ask the corporate, Sophie and Shuilin, to give us a description of how their treasuries are set up and organized. What activities are done where? Sophie, you want to start?
Yes, for sure. Thanks, Lane. Hello, everyone. Glad to meet you here. As Lane just mentioned, I'm Sophie Young from Henkel. I'm the Regional Treasurer for Asia Pacific. Thanks for having me here to share and exchange the view on this topic. Maybe to start with a bit of wording for Henkel. As you may be aware that Henkel is a German company that operates worldwide with diversified portfolios in 3 business segments. We call them adhesives, beauty care, laundry, and home care. And in Asia Pacific, we basically operate in 13 countries and locations with a combined markets of open and restricted markets. And our regional treasury center is located here in Shanghai, in China. And we are supported by 2 shared centers in Manila and Shanghai, respectively, for the day-to-day routine treasury tasks. In terms of the Regional Treasury Center, we are located here in Shanghai and we oversee and manage all the treasury activities of the region. Our main focus area is the liquidity and financial risk management, be it like the cash and FX risk management, the counterparty risk management, trade financing, the capital management, etc. We also take care of the treasury reporting, the transaction banking services, so on and so forth. So it's a full coverage of the treasury activities in all markets that we operate in line with both internal and external bank policies.
Thanks, Sophie. Shuilin, why don't you give us a description of your activities? And I assume you're also in Shanghai, right?
Yes, I am. Hi. Thanks, Lane. Hi, everyone. Good morning, good afternoon. I'm Shuilin Chen, Head of Treasury with Trip.com, the largest online travel agency in Asia. And we serve 400 million users in China and globally. On trip.com app, you can find 1.4 million hotels available in 200 countries, and flight network covers 2 million individual flight routes. So next time when you shop around for holiday ideas, I invite you to take a look at our app. The Treasury Department of Trip is organized the way to best serve our China domestic business and international customers. In terms of daily treasury operation, we have one China team that take care of the daily operation in China, account for 80% of our business right now. We work with around 30 different Chinese banks, but on a daily basis, about 10 of them, which have the established API connectivity with our TMS. For our international business, we have a treasury platform in Hong Kong and another one in Singapore, where we do the usual treasury cash pooling activity and FX transactions. In terms of technology, our TMS is developed in-house, so it has been a work in progress for a couple of years now. We have the cash management module works perfectly integrated with our business, but some other modules like risk management, reporting, they're a little bit still need some more fine tuning. Apart from treasury operation, my team also take care of capital markets, financial risk management, etc. So that's about it. Back to you, Len.
Thank you, Xuelin. That's clear. Chintan, you want to say just a couple of things? You're going to be on here, so just where you're located and the area you cover.
Perfect. Good morning, good afternoon. Happy to be on this webinar today on a very interesting and a relevant topic around CBDCs. For some of you who may not know me, I'm responsible for our corporate cash management business for Deutsche Bank in APAC. I am based in Singapore and have been with the bank for well over 19 years now across multiple functions in multiple countries across the region. So very happy to be on the call today and to be talking to our two esteemed corporate treasurers and understanding their experience in this space.
Okay. Thanks,
Thank you, Lynn. Back to you.
Thanks. So let's start with the first subject of the webinar. As you heard maybe first in the agenda, I have a couple of questions on this. It's CBDCs, digital currencies in general, as well as electronic wallets, and specifically its impact on treasury, maybe related to payments and other operations. So just to start the question, it's still early days in the development of CBDCs. There's only very few governments that have developed this. The one that has actually done sort of ahead of the curve is the PBOC, China. They've led the way through the issuance of the digital currency electronic payments, or the ECNY, last year. So I will, as both of the corporates are well represented in China, how do you see that development? And considering indeed your large presence in China, can you elaborate how you're using this technology? Sophie, I'll start with you, maybe.
Sure, no problem. Happy to take this question, Lane. So from a digital payment standpoint, at Henkel, we are using multiple ways actually for the operational payments and collections. And the prevailing wire transfer is still taking the dominant position, I have to say. While at the same time, we are also using the e-wallets, as you just mentioned, to support our online business for beauty care and laundry. Like in China, we opened up Alipay wallet for collections in the Tmall flagship store from the consumers. In other regions, we also have Henkel eShop for beauty care business. It is a kind of in-house marketplace developed by Henkel and open to our registered customers. There they can place orders, track delivery status, and we also incorporate payment functionalities like the credit card, like the PayPal and other e-wallets, PSP payment methods to accommodate different payment needs. And this provides our customers with an end-to-end shopping experience in our own e-shop. And besides that, we also closely monitoring the development of the so-called stablecoin. They have gained some influence in the markets these years. It's a kind of programmable money that is pegged to a sovereign currency or related assets. We are also looking at this direction to see how relevant it is to our business operations and payment transactions. And as you said, the CBDC is another rising topic. I think among the global central banks, China PBOC is definitely taking an advanced position in promoting and launching the digital currency. And we are moving faster than other countries in terms of digital payments. And we are, from Henkel's side, we are taking advantage of this to open one ECNY wallet at one of the authorized operators. We would like to pilot this with our one of our distributors who is managing the online beauty care store in Taobao platform. Because from their end, they also have one ECNY wallet opened to collect money from end consumers. So for us, the usage of ECNY is more from a B2B perspective, because we don't directly sell to consumers, even for beauty care and laundry business in those flagship stores in public marketplaces. So we are following a kind of distributor model for online sales in the two business segments, beauty care and laundry. So we use ECNY to collect funds from those distributors. Therefore, it's an adoption of CBDC in the B2B area. In fact, yeah. So that's basically a fact. That's how we are utilizing this ECNY opportunity in China. Back to you.
Just interesting, and just a lot of this is still domestic. I understand. Is that correct? I guess exactly. The next. Yeah, so the next step would be looking at this also more internationally, but that's, I guess, some of the developments that you're monitoring, but that has not been developed yet by, I guess, neither on a CBDC level or maybe some of the other electronic wallets. That's correct, right?
Yeah, I confirm what you said. Lane, it's just at a pilot now. Domestic, definitely we are open for collections or payments on a broader scale, like you mentioned, the cross-border ones. We already seen some live cases in the market, more in the B2C area. So yeah, we are observing the market development very closely and see whether that would be relevant for Henkel as involved in the B2B business, more or less.
Thanks. Shuilin, what are you guys doing at Trip.com Group?
Yeah, happy to share from our side. We're one of the pilot companies that collaborate with PBOC. I mean, actually, there's an institution under PBOC that is responsible for the research and promote of the ECNY, and we started the collaboration last year. I think one thing that we will keep in mind is that PBOC has made it very clear that at the first stage, the ECNY is only going to replace M0. That means at the very first stage, the target is just to replace the physical cash and coins that's circulating in the economy. That's why when they wanted to collaborate with us, they only interested in very small sum transactions, not like buying a flight ticket or book a whole holiday, but just small purchases, such as I think the first partners that they choose are more like grocery shops, like kiosk, or like online food delivery platforms such as that. With us, they were interested in scenarios like just purchase of admission to amusement park. So they have made it very clear that at the beginning, they do not put like 2B payment as the like B2B commercial payment as their priority. So right now, yes, on our Chinese APP, it's still, you're right, Elaine, it's still a pure domestic tool that we have on our Chinese APP. Our customer can buy park ticket or certain like a small value travel product with the e-wallet apart from, but we also offer customer other payment method, right? Like WeChat Pay, Alipay. We also have a Ctrip Pay because our company we are authorized like a payment license as well, and bank cards. To put things into perspective, I would say that as of right now, in terms of volume, the ECNY transaction account for very, very small fraction of our total transaction, right? I think 90% are e-wallet payments from such as Alipay and the WeChat Pay card payment account for 10%. and that's about the market share.
Yes, I was reading Alipay, especially the huge developments. You can connect as a consumer user to all kinds of platforms, so it's extremely flexible. Yeah, so I think that's obviously that explains, of course, the divergence in between the two usage. Would you say that?
Yeah.
Or?
Yeah, and also that's why
yeah.
I think ECNY take off so the acceptance is so easy, right? Like among China, because Chinese consumers are used to e-wallet even before they implement that. So they kind of take advantage of what already exists in the market. And also I think they kind of took a shortcut as well, because the ECNY is not a real CBDC, right? It's not distributed directly by the central bank. Basically, I think it's still a commercial, like you have to have the commercial money first, commercial bank money first, then you can get the ECNY. So actually it's not directly distributed by the central bank.
Understand. I have one question here from Tapan Agarwal. Let me read it. For payment software or core banking software, where can they treat CBDCs or just another ISO code with one-to-one exchange with local currency? And what's the impact of CBDCs on software payment platforms at a high level? Any of three of you feel like you want to answer that?
Maybe Lane, I can give that a shot, but before we get into that, would like to also build on a couple of points that both Sophie and Zulin spoke about on CBDCs, right? So let me give it a little more perspective from what we see from a bank when we speak to a lot of our corporate clients. Now, the two predominant use cases we are speaking to clients about, or kind of which is at an exploratory stage. One is looking at CBDCs as an effective domestic payment schemes. And the second is, how could you extrapolate multiple domestic CBDCs into a cross-border payment settlement scheme, right? So on the first part, which is a domestic payment scheme, that's where, like Sophie said, the ECNY has kind of made the most rapid progress among various countries. And then that also is completely in sync with where the entire digital economy and the evolution has been. We've seen rapid expansion of e-wallet providers in China over the line in multiple markets. When you look at it, there's been a rapid kind of migration from a traditional physical check and cash based payment system or payment mechanism to a more electronic 24/7 instant payment schemes, card schemes, or alternate payment providers supported e-wallet schemes, right? So when you look at that entire migration, that has led to, in a way, a significant development on the entire digital commerce itself. The entire disruption and expansion of business models through e-commerce or m-commerce is kind of well supported and kind of is what expands very rapidly across the world on the back of this payment methods that has just made this entire transition from a single physical channel of business to a more omni-channel business models. One of the concerns or one of the priority that is being looked at, topics being looked at, is the problem statement that CBDC aims to settle, right? Which is one, it brings a much more trusted function, trusted utility, as compared to alternate payment providers who have e-wallet schemes, which are privately run companies. The CBDC is being issued by central bank provides you much more certainty on the value that you carry, reduces risk significantly, while having a 24/7 settlement scheme. Second, yet to be seen, but quite likely the cost of settlement of CBDCs will be far lower than the traditional card schemes under Visa or MasterCard. So from a cost perspective, we expect this to be, again, far more optimal. So when you look at all of these constituents and the way the business and the economy is moving towards a omni-channel settlement, we clearly believe that the CBDC would have a network effect as a payment settlement scheme much sooner than most people expect. And hence, what we're seeing with a lot of corporate treasuries is keeping that option or keeping that payment channel live, right? See, ultimately it's a push payment. It will determine on consumer behavior. A consumer chooses to pay by an Alipay wallet, or chooses to pay by a Visa card, or chooses to pay by physical cash, or in future could be through CBDC. So what you want to do is enable multiple payment channels for your end consumer to pay by, and then let the network effect pay out. As more and more merchants adopt this currency, we would see that coming in. And once you see that network effect in the domestic payment schemes, then comes point number 2, which is, could this be expanded more cross-border? And that's where it's either the acceptance of ECNY or a particular CBDC issued by a central bank in multiple countries, or could that be a scheme where we have or CBDCs issued respectively by the various central banks for their own country, and then you have a multilateral settlement of those CBDCs across countries, which is what MAS is exploring with few more countries like Australia, Malaysia, South Africa under the Project Denver. So that's where the idea is to simplify and automate the entire cross-border payments scheme. That is also one of the stated objectives, as we know from the G20 roadmap, where there's a clear acknowledgement that there's significant amount of friction and significant amount of cost overheads when it comes to settling for cross-border payments. So being able to have a more multilateral CBDC settlement between these countries and more would make it, again, cost-effective, real-time settlement of liquidity across multiple countries. So that part 2 around multilateral CBDC, that is still at a very, very, very nascent stage. Probably most central banks have it in their 5-year roadmap and will evolve in terms of how the technology platform will settle, and that to some extent has still an open point from the question you raised around the underlying technology. But when it comes to corporate treasury and being able to account for the CBDC in their ERP, that will be pretty straightforward, because that's an ERP configuration as an additional, you could call it a currency type. But ultimately, the technology stack under which the multilateral CBDC would settle will need to be kind of evolved and developed over the next, I would say, 2 to 5 years. So that's where we see this domestic roadmap be ready, enable that as a payment scheme in the countries where CBDCs are issued, and then see how the network effect plays out, and then see how the remaining countries look at that and find a multilateral settlement option between CBDCs across the country. But that would still be, like I said, a few years away, and then we kind of see that journey through this period. Whereas banks, we would continue to play an active role is working with the regulators, working in simplifying corporate or P2P use cases for the regulators, for them to understand what are the needs or the use cases that we're trying to solve for. And as we kind of be that intermediary between the industry, which has a friction in the cross-border payments, look at the use cases and then work in an advisory role with the central banks to find the right operating model, is where the interesting part over the next 2, 3, 4 years will be.
Thanks, Chetan. Shweli, you have a question I see on the chat on the percentage of customers that use.
Yes, I said. Yeah, thanks. I think just to reply to Lee Fan, actually, like I said, because right now there is transaction cap on the amount that you can do for each transaction for the ECNY. That's why the total GMV for us, I have to say, it's less than 1%. It's very, very small.
Thanks. Oh, another one on the chat, and then I have a question actually for Chintan. What you said earlier is quite interesting. But will CBDCs pay interest? If so, will corporates move holdings and performance sweeps and cash management in CBDCs? I guess it depends on to what extent CBDCs are really viewed as a proxy currency or whatever it is. What do you think? Any three of you?
I really don't know, right? I mean, it's like we said, it's early days. I don't think the primary use case of CBDC is being looked at from a yield or a return perspective, because that you have multiple investment tools to solve for from a yield perspective. However, as CBDC expands and you see greater adoption of CBDC by consumers and by clients, ultimately CBDC is the currency that you hold through a bank into the central bank, and provided there's a return on that balance, that return will be passed back to the consumers for sure. Alternatively, consumers could look at an opportunity to settle through CBDCs to achieve the efficiency gains from that 24/7 low cost of transaction settlement. But once you are in the custody of CBDC and you don't need it anymore for further payouts, then you could convert that into your bank account and take it as a one-to-one value, right? So finally, this being pegged to a fiat currency, it is the real value ultimately into the bank account, and then you get interest there. But those are the topics that we will kind of see how it evolves. What are the thoughts of the central bank and how do they encourage adoption? Could be used as a tool, could be used as a leverage to expand adoption.
Yeah, it will depend on to what extent it will become a fiat currency in itself, I guess. So that sense. I had a question, Chintan, on and also what Shreya mentioned on the development of CBDCs. The way I at least listening to you guys, it seems like before it even can reach the stage of cross-border, which is far away, as you said, it should potentially first reach the same levels of functionality and flexibility as Alipay, which it doesn't have yet, right? Is that a good assumption that the development of CBDCs, or at least the way payments are made, that reaches at least the same level of sophistication as Alipay, WeChat Pay, etc. have right now? What do you guys think?
For me, I think right now it's true that when you look at the way how CBDC, the eCNY wallet it works, as a private customer, individual user, I don't see any advantage of using eCNY wallet versus Alipay and the WeChat Pay, because those are two super apps. Not only have payment function, they have a lot of other things. But I think this is also the result that the PBOC hasn't really pushed for it. I mean, in China, if PBOC want to achieve something that they could, yeah, there are a lot of scenarios that they could not force, but to ask the companies or customers to use it, like to pay for your tax, to pay for your, I don't know, utility bills, for example. They could easily create scenarios and to speed up the adoption of the eCNY. And therefore, and of course, one difference between the eCNY and the other wallet is they made it a legal tender, right? So that's why if you go to a shop, legal tender, if you go to the shop, you want to pay with the eCNY wallet, the merchant has to accept it. While for other companies, for other digital wallet, it's not the case. Yeah.
Just another question. Of course, you both Henkel and Trip.com Group, where you are, I would say, the luxury is one thing, but the advantage of being in China and the PBOC having advanced this. So you're at the forefront in that sense. You can imagine, I assume also on the call, there's many other treasurers in other companies in other countries in APAC, where although the central banks there are thinking about it, they have not reached that stage of development yet. So as this technology potentially goes further, and there will be true advantages potentially compared to Alipay or other forms of payment, what do you think the best are? How do you think companies could take best advantage of that to prepare for this, even though it's not there yet? As you guys have are in the middle of this and have started developing this, using this, I could imagine there's people in the audience that have, as I said, are in places that they know it's coming, but they don't know how or when. it's just a thought. When maybe a year ago when they started this, or I think in 2019 and 20, I think PBOC was doing tests on this. How do you guys prepare for this, or did you at all, or can you even prepare for this? And what would be your advice or recommendation to some of the companies out there? Shailene, you want to give this a shot? But this is not one of the trick questions.
Sure. Yeah. No, I think I think that the digital asset, right? I think before the CBDC, we talk about crypto, and already at that time, a lot of corporates, at least not even if not considered, but at least like internally, they already had discussion about crypto asset, right? And then it turns out that the Bitcoin is more like a storing of value because the transaction capacity is too low to cope with the business transaction. And then it comes to the CBDC, it's more like a competing, for us, it's like a competing product or currency that the central banks are talking about. And I think it will become the reality of the future or the current generation of corporate treasurers. Like, we have to be able to deal with the digital world, and the thing is, it's not only the asset itself or the currency itself, it comes with a different set of counterparties. We never used to deal with central bank before, and if we adopt CBDC, you have to deal with the central bank. If you deal with e-wallet, you have to kind of connect with other fintechs. So I think it's a whole thing that corporate treasurers have to prepare, at least to get enough knowledge into it. What is the risk? What are the technology, the underlying technology for those digital assets? And for us, the thing is, you kind of have to do some work, because even for not silly things, but we probably never thought about that before. That I found out that even for accounting department, they need to know how to account for those digital assets. In the past, that before I came into Trip.com, our cash balance held at the Alipay wallet, it was treated as account receivable. It was not considered as cash, because from the auditor perspective, they do not recognize it as cash. So all the things, if you don't learn about it, if you don't try it, you probably don't. Like, if you just be outside and looking at, okay, we don't, these things is developing, but we don't want to be one of the guinea pigs. We will let other companies test it, and then we will adopt it finally. I think a more positive attitude would be just open an account and just try it, and so you can move forward when there is a real development coming in the CDP. So I would love to see cross-border, large volume, frequent settlement transactions that would bring real value to international corporates. And then when that day comes, you are more or less prepared, right? Yeah.
Thanks, Shailene. Sophie, what's your take on this?
I would say likewise. I think the PBOC will definitely continue to prudently advance the ECNY pilot projects in line with China's 14th five-year plan. Although we haven't seen a concrete timetable for such final launch, we would foresee, I would say, more test scenarios to cover possible situations in the future. Now it is mainly covering the utility payments, catering services, transportation, the shopping, or those kind of government services. But in the future, we expect more scenarios may pop up to optimize the ecosystem of ECNY. While on the other hand, whether ECNY will be used for cross-border payments on a larger scale is drawing much attention. And currently, it is mainly designed for domestic retail payments. But going forward, with the renminbi internationalization, we do hope to see the application in more cross-border scenarios. Actually, we've already seen some small pilots in Hong Kong. Technically, that means it is ready for the cross-border use. Question is how fast it can be promoted to the cross-border scenarios. So on a larger scale, I mean. So at this stage, I think those corporations like Henkel, we are more involved in the B2B business. We can definitely do ECNY transactions in the domestic market. We plan to do that as well. But objectively speaking, it's more symbolic than substance at this stage, because there are not many advantages compared to the prevailing wire transfer payments, because domestic wire transfer is close to real time, it's high speed as well. But while at the same time for B2C business, Alipay, WeChat Pay are still the preferred payment methods by consumers. So I think in the short term, the public still need time to accommodate and form the new habit of using ECNY. But despite of that, I think it still was a try, similar to Shiling's comments, from a perspective to provide a future-ready payment solutions with very low risk and cost from corporation side. Because ECNY is settlements based on payments, no delay even for a second. And it also operates on a 7x24 mode. And it's backed with very strong sovereign credit. So that fits the corporation's needs very well. And we may see more benefits in the future if the scope of usage can be expanded to cross-border payments. We can also definitely benefit if one day ECNY payments can be embedded into the corporation's online e-shop. Then that could save the processing time and cost under the B2B model even, and could bring us more tangible benefits. So from my view, for Treasury, we are now more preparing for the future on this new rising kind of payment method. So it makes sense to me to take the advantage of this emerging tool to gain the early experience, to test it out, and then to pave the way for the future.
Yeah, thanks. There's a question on the chat related to hedging. Can you guys read that? So, I mean, anybody want to take that? I mean, my first comment would be hedging is usually done towards a currency that is your base currency. And as Chintan mentioned, I guess then the CBDC would be, if it's completely linked to your domestic currency, it would be a one-to-one, if that is indeed the case. And what I guess this is really a futuristic story because there's no such thing available yet. What do you guys think?
Yeah, I think on one of the pilot projects that Sophie just mentioned, it's called mBridge, right? I think there are 3 central banks participate: PBOC, Hong Kong, Thailand, and maybe Emirates as well. I think they're participating in that pilot initiative, and there are some projects that have been tested, I think, and one of them is the derivatives on the CBDC. But I think we are talking about some really pilot projects that I think they haven't worked out the hedging cost yet. But ultimately, it has to be, if it's pegged to a solvency credit, it has to be the same as the hedging cost to the country's main currency, right? Otherwise, there would be arbitrage opportunities, I guess.
Yes, and theoretically for hedging, you need an interest rate. So again, that would indeed require some peg to the fiat currency. Before I move on, because we need to move on to the next subject, just maybe ask Chintan on some of the comments, how corporates would prepare for this. Is there any final comments you want to make on that? Because I think Shailen and Sophie were quite elaborate on this. And
that's right, David. I fully agree with the comments made by both Sophie and Zune. For the domestic CBDC, be operationally ready. Nobody knows at this point how the adoption will ramp up, but knowing how fast market evolves and then the developments happen, you wouldn't know, right? So just be ready with multiple payment channels. Let the consumers make the decision in terms of whether they use a card payment or they use a wallet provider, or they may push a payment through a CBDC. Irrespective of what they do, you get that money in and you book the sale, right? So being ready is what we are recommending, and we are kind of talking to clients about. On the cross-border payments, like we all agree, it's very, very early from a CBDC perspective, but that's where I believe your next segue is in terms of what do corporates do today, especially in APAC, where there are restrictions around exchange controls and how do you still reduce friction and make the entire cross-border payments far more efficiently? So maybe, Lane, I jumped into your point, and then happy for you to elaborate more, and then Sophie and Zealand to pick that up.
Sure, no problem. Yes, let's jump into the next point as I wanted to do, and Chintan already alluded to, which is the other subject of the webinar, which is new age technology, as it's mentioned here, and mainly we're talking about artificial intelligence, RPA, and especially related to treasury, and especially related to restricted markets, because of course this technology in engineering, in all kinds of other areas has been elaborately used, but it's still also developing. Now, from a treasury perspective, I know in my own experience, I've looked at that, implemented some of it, mainly on artificial intelligence and also RPAs in operations. So what about you guys? Sophie, to what extent are you using any of the new age technology in operations and payments, and maybe also to mention any restricted markets that come into play, or just in general? Go ahead, Sophie.
Yes, Lane. As I said, in Asia Pacific, we are supported by 2 shared centers. So yes, to your question, AI and RPA, they are mostly adopted by our 2 shared centers here during the daily operations. Like they use RPA to do to automate the bank reconciliation process, to automate the account clearing, and also some treasury reporting activities. And the main purpose for them is to really automate those repetitive and rule-based processes. And for regional treasury organization, from our standpoint, we are also looking at those efficient tools to push for better insights and more streamlined procedures, like the bank data analysis, like the liquidity forecast, etc. I would also like to tap on the AR reconciliation. It is under credit control and OTC instead of treasury in Henkel, but I think it might be relevant for other MNCs. They are also using kind of AI technologies to anticipate the future cash collections, customer collections at a certain assurance level. So overall, we do see like cases of using those technological applications, while some of them have been used for long and some still under implementation process. So basically from our side, we would on a regular basis scan all the activities from time to time to gradually enhance the process efficiency and support more intelligent decision makings through the support of those technical solutions. Back to you, Lane.
Yep, I'm trying to unmute it now. Shrelin, what's your, I know you have definitely some usage of AI and RPA in your operations. Maybe you can elaborate on that.
Yeah, for the IPA, it's similar with what Sophie just described. Actually, in finance department, it's not first adopted by us. It was first adopted by accounting department because they receive like huge amount month-end closing data, and then they have to like a lot of manual work involved in order to sort data, standardize them to a certain format that they can upload to their accounting system. So we learned about the tool through internal sharing, and we thought it's an excellent tool for us for those mechanical and repetitive processes that we do have at our treasury daily operation. I mentioned initially that we have bank accounts with over 30 banks in China. Banks in China, they are like 2 extremes, right? You have the most advanced one, like you connect like API with them, and we have instant payment data or bank balance in our TMS. On the other hand, there are some type of banks that they still issue paper bank statements. And for the ones that we work with, we do not have a direct host-to-host connectivity. So basically, someone have to go on the e-banking platform and to download bank statement and then push them into my treasury management system. So this is very manual. It's very painful. And we started using RPA to help us to log on the e-banking and to download bank statement. And also the RPA is connected with hardware, because we know when you go on the e-banking, you have that small key and then there is a OK button on it. So actually it's connected with a mechanic arm that would press on the OK button as well. So those are the interesting things that we have encountered, and our objective is definitely to cover all the at least on this part to have all the e-banking process covered using the RPA. In terms of AI, I think we are not as advanced as Sophie or the corporate. We are at a very niche, it's more like again working in progress. We work with a team of engineers to look at how can we produce the cash flow statement before the monthly closing completed. So in the past, actually it's actual reality that Treasury Department has to produce cash flow statement. And normally you have to wait until the accounting team finish the monthly closing and give you all the data. However, we do know that because we have all the information, bank information already collected at Treasury in your TMS. So normally, theoretically, we should be able to produce, not be reliable on other departments in order to produce a correct cash flow statement. But the difficulty we all know that is not on the account payable part, it's more on the collection. So in the past, we would have someone to manually stamp each of the incoming payments and to say, okay, this is operational, this goes to which business unit. And right now we are working with a group of engineers to use an AI to find, basically to have an AI solution to be able to label each of the incoming cash flow, and to achieve that, actually, it's the workload is beyond my imagination. It's much more difficult than I thought initially. Basically, you have to feed the software a large amount of historical data, and without telling the software what is the rule. So basically, if you see A, then the conclusion is B. If you see C, the conclusion is D. And there are different models. You have to cleanse the data so the AI, it can improve the way the success rate for the AI, for example. So those are things that we are learning right now, but we are very far from actually having something concrete or precise enough for us to use that in the production.
Yeah, clear. I was looked at RPA is doing and AI is thinking, but it's intermingled because you need to have a lot of data which is doing in order to be able to start thinking.
Yes.
Chintan, what do you see in this space? I'm sure there's or are Henkel and Trip.com pretty much what is in the current environment going on.
That's right. So again, Julian made a very relevant point around the challenges and complications of being able to manage an end-to-end automated corporate treasury when it comes to exchange control regulated markets in the region. If I were to put this more simply, there are multiple ways in which you look at that. And what we have at Deutsche Bank work with some of our corporate clients is to adopt a automated workflow solution that covers the entire liquidity, payments, and FX workflow solution for our clients, which is based on a rule-based machine learning algorithm. So the idea is simple, the execution is complex. When you look at it, it really starts with a client determining what the liquidity position should be for them in that desired market. Once you determine that liquidity position, and to give an example, let's say that's $10 million. So the objective of this client will be to take any liquidity in excess of $10 million from that country or from that exchange control regulated country out into the regional treasury center or head office. Now that requires step 2, which is providing the necessary purpose of payment or underlying documents to support taking the liquidity out from that country as a cross-border payment. Point number 3, you need an FX conversion on the ground for moving that liquidity from local currency to cross-border payment, and that again requires validation of the documentation to be able to support and execute that trade. And point number 4, ultimately, is where some of the clients at the head office would have taken hedge exposures or hedges on this exposure over the next 12 months. You need to unwind that hedge. What we have seen with most corporate treasuries, they look at each of these components and provide an instruction or provide 4 different instructions to the clients to manage the payment, providing underlying documents, doing a spot FX conversion, and then unwinding their hedge exposure at head office. What we have looked to do along with some of our clients, and that's where the bell curve is kind of very, very different across corporate clients, is to see where we can automate that workflow, where the client would provide a one-time target balance business rule and will then look to outsource that entire workflow for the rest of that over that excess amount with the bank, which includes the bank managing documentation for the client through a doc digitization workflow, managing warehousing of the underlying documents over a period of time, and then monitoring the balances through, again, automated liquidity pool structures. And then as you see the liquidity exceed the threshold amount, the bank will pick through its own machine learning capabilities the amount to be determined over the excess was the underlying documents available which are ready for authorization to make the cross-border payment, and then do the spot trade and the FX and hedge unwind on the back of it. So it's an end-to-end workflow solution across liquidity, payments, and FX to significantly reduce friction for our clients. And that's where a lot of effort and solutioning is where we spend a lot of our time with corporate clients on, because while the entire domestic payments landscape, as we spoke about, where CBDC is the last kind of ultimate payment tool, there are enough very efficient domestic payment rules, payment engines available for clients to settle, where the struggle is being able to take liquidity out from these markets. And to offer a solution that's all comprehensive is where we've seen a lot of interest.
Yeah, I guess if you are in multiple countries, if you're 1 or 2 countries, it's okay. You can do it either manual or you do the automation for fun or for more exactitude. But on the other hand, if you're in 30, 40 countries with these issues, it's nice to have something rule-based that would indeed work. Just another question for also for the corporates. When I was doing this, and at the end we had a wish list, sort of a long-term strategy of where we wanted to focus on. This was a new technology; it still is new, and but it's developed pretty fast. We, like you, we were looking at indeed accounts receivable, liquidity forecasting, also anti-money laundering. I know banks use that a lot for anti-money laundering, etc. Do you have does the implementation of these new age technologies figure into your strategic thinking, in the sense that, okay, this is manual or this has not been done well? Do you look at this as, say, okay, in 5, 10 years, as it is a lot of work, do you have any of these things that you put out there and say, these things I want to look at in the next, I don't know, 5 years or less? And what would those things be? Or did you cover everything already that you have done? Traylin, what's your take on this?
Yeah, I would love to have a 10 years plan, but unfortunately, we're a little bit more like a shorter horizon, especially right now, because the travel industry, like in China, it was at the rock bottom, and outside China is a little bit like we see some recovering. So Treasury we have our traditional priorities, right, at the Treasury, but technology is definitely one of them. Yeah, for me right now, it's really, I think the API connectivity, with international banks, RPA, I think this would be a staple for us, because it's really a easy to low maintenance. Of course, you need someone in-house to be able to maintain or change it. But I think compared to a system or like interface, like which requires huge IT support and upgrade needs. RPA would be a staple for us, and AI. Yeah, I think I like what you just described, Lane. AI is for thinking, right? I think for something that is more costly to put in place and requires much more effort, and it's more avant-garde as well. So it would be used in as a second opinion in terms of when you have to make a decision. It's an excellent tool just to double check or check again, to benchmark what would be the other decision. So yeah, that's for us. Yeah.
Thanks, really. So, Sophie, what's your take on this? Any subjects you have on your wish list for the next? I don't know if 10 years is too long, 5 years, 5 weeks. I don't know. What do you have going forward? What are you thinking about?
I would rather comment from a shorter period of time. Instead of 5 years, I would look into a 1 year time frame. I cannot agree to you more. Indeed, APAC is a unique combination of emerging and mature markets. Therefore, we need to master all those kind of challenges in a very dynamic and political complex environment. And we also see very diverse cultures and discretional policies, regulations in different markets. So we would be looking into those solutions that can really improve our way of working. To be concrete, we are now working on 2 things by using the RPA and AI technology. One is the in-house developed solution for the cash flow forecasting. We are following a three-step approach. The first step is to forecast the cash flow in 3 months' time, in a short period of time, by using what is already booked in the SAP. And we are using Liquidity Planner, which is a module inside SAP that supports us to automatically get an insight for the future cash flow in 3 months' time. And then the second phase of this project is to incorporate sales and production data as well, because those kind of transactions will highly likely to happen in the future, just that we haven't received invoices or we haven't issued invoices for that. So for those items, they are sorted out and we feed them into the tool as well. And this could further support a longer period of forecast for up to 6 months. And then coming to the last step, because number 1 and number 2 step, they are more leveraging the RPA technology, while our ultimate targets in the third step is to incorporate AI technologies to provide a higher level of automation, because it uses self-learning algorithms. So basically it will explore data connections, find out patterns, and provide better insights. So those recurring liquidity items in the longer run, like the operative transactions, the personnel, the tax, the interest, and other non-operating items will all be analyzed for patterns. And with the support of this AI technology, we have the chance to further provide insights on a 12-month basis. So this is one project that we are currently using by leveraging AI and RPA technology. Another aspect on top of the cash flow forecast is that something that we are currently working with Deutsche Bank. I think Qingtan has already shared a lot in this regard just now. We are now working on cash pooling, cross-border cash pooling with Deutsche Bank for Korea. It is called CMF, Consolidated Management of Funds. The purpose is to repatriate surplus cash out to our headquarters in Germany. So our next focusing topic would be the cash outflow, cash concentration to headquarters for such cross-border flows. So because Korea is non-deliverable. Korea one is non-deliverable offshore, and also Korea is kind of restricted markets. So how we could act within the boundary of the regulation, but in a more effective way. So the concept is very much in line with what Qingtan just mentioned. It's a combination of the target balance and the auto FX swap. So target balance is easy to understand, right? So excess cash over the target balance will be automatically swept to Germany. And on top of that, FX swap will be triggered as well, according to the predefined rule as far as the far leg is concerned. So in addition, we also set up a seamless STP connection to automate the internal reporting of such FX trades. So I think this is a good example of the combined cash and FX risk management by using RPA. So we are currently in the process of working with Deutsche Bank to launch this. Hasn't been put into place yet, but I think this is a meaningful topic to work on under such a dynamic international environment. We see.
I think we lost Sophie. I think she'll be hopefully back soon. Yeah, no, that's Australian. Okay, let's wait till she comes back, but I think we're almost at the end of this. What I wanted to, is if she doesn't come back anytime
I think
soon,
she's back, Sophie.
okay.
I'm sorry.
That's
sorry,
okay.
Lane,
You're back
can you
now.
hear me and see me?
Now
I just
can.
got disconnected. My wireless is not stable.
Okay.
Okay.
Sophie, are you still there or not?
Yes, I'm here.
Oh,
Can you hear me?
Why don't you finish your thoughts, and then we, after that, we can we slowly get into the end of this, so we can wrap it up after that. But finish your thoughts, Sophie.
Yeah, I'm about to finish my thoughts. Apologies for the network issue. So I mean, we see political risks here and there in different markets, and that also increases the needs for cash concentration to avoid trapped cash at local. So in this regard, having an automated process to repatriate cash would certainly support. And that's basically what I would like to share. Thank you.
Great. Thank you. Thanks. I guess we are at the end of the time, because I think an hour was taken for this, which is okay. Any last thoughts on? Yeah, Chintan, you're writing it up. That's what I was going to say. Yes. Any last thoughts from any three of you on this or the previous subjects?
Maybe I can make a couple of quick points.
Sure.
One, like we discussed over the last hour, the entire domestic payments landscape is pretty well matured and settled through multiple payment methods available. Right? So that's a place where I think we are in good shape, highly efficient, cost-effective, fairly strong risk management practices in place, and then there is more to come in that space to further improve efficiency from a CBDC perspective. Point number two, friction remains in cross-border payments, especially in the exchange-controlled regulated markets. The multilateral CBDCs will be one of the solution, but still far out. In the meanwhile, being able to offer an efficient workflow solution for these markets, which bring together liquidity payments and FX risk management, adds a lot of efficiency for corporate treasuries. Point number three, looking at within the corporate treasury itself, we spoke about the relevance of AI in cash flow forecast, which is absolutely spot on. The other topic that we didn't get time to talk about today much, where again AI is very relevant, will be fraud risk management from a payments perspective for, again, corporate treasuries, right? So there are multiple solutions and tools available where clients can improve the fraud risk kind of mitigating factor in the ERP platforms itself. So that's another piece that we see a lot of work being done. So yeah, I think well summarized in the last 1 hour from my perspective. I'm happy to give it back to you, Lane, and thank you to Sophie and Zulin for the call today.
Yes, thank you, Chintan. Well, I'm going to wrap it up. I would like to thank Muriel also for organizing and inviting us to this webinar. It was very informative. Thanks to the participant, Shueilin and Sophie and Chintan, of course, and everybody for listening. And I think from my perspective, it was very informative. Thank you very much. Muriel, I'm handing it back to you.
Thank you very much, Lane, and thank you for chairing this session. Of course, thank you all the speakers for sharing their best practice as well. And I would like to thank Deutsche Bank for making this event possible. And finally, of course, as Lane said, thank you all for being here. I hope you found the session helpful. The next webinar will be on the 16th of June on building a data-driven treasury. We have Salesforce and Johnson Controls speaking about their experience on this along with Deutsche Bank. So I hope you'll be able to join us then. So please watch out for our emails. We will be sharing information on this shortly. Hope to see you again. And thank you very much for being here with us today. Bye-bye.
Bye.
Bye-bye.
Bye-bye. Thanks,
Thank
everyone.
you.
Bye-bye.
Thank you.